Welcome back to Fast Market here on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's going to be Andy Swan, co-founder of LikeFolio. Welcome back to the show, Andy. So we're talking Visa. MasterCard earnings came out this morning. That stock's down about 1.5%. What kind of data are you seeing? Are consumers still out there spending? Are they still swiping?
Yeah, they're still swiping, but I don't think they're swiping as much. That's pretty clear. There's only so much that the consumer can do, and I think the consumer's been leaned on and performed extraordinarily well, given the circumstances. But it kind of feels like last week's earnings report from Discover was really a canary in the coal mine for the consumer. Discover came out and said essentially that they're starting to see early delinquencies. In other words, people not paying their bill for more than 30 days tick up significantly on a year-over-year basis, and kind of sounded the alarm bell on that. And that's an early signal that the consumer is getting tapped out. When we look at trends at LikeFolio, consumer trends, just talking about spending, saving, that sort of thing, we're really seeing a big uptick in the number of people talking about falling behind on their payments just in general. So any debt payments that they have, they may be falling behind on. Their savings accounts are being depleted, and they've started to max out their credit cards. And when you put all of that together in a rising interest rate environment, it becomes pretty tough for a lot of people to keep up because, people are losing jobs. Employers have a lot of power to not give raises in line with cost of living increases. And so all this debt's kind of piled up, and now the consumer really has nowhere else to turn. The savings account's tapped out, the credit card is starting to max out, and they're starting to fall behind on payments. And so we think, in general, when we go into these earnings reports, it's not surprising to see some of these credit card companies get dinged on the reports. I think Visa, setting up pretty well for a little bit of a bearish bet here. As you noted, the stock has moved up over the last month or so, and it just seems to be fighting a real serious consumer credit crunch that is just getting started, and I think will continue into the near future.
Andy, I think you're hanging out with Tom too much. You're getting awfully negative here. I mean, that's not like you. I don't like the negative Andy Swan very much. But here's the thing, Andy. Everyone knows the number of swipes, right? That's how Visa gets paid, just like MasterCard, by the way, which is down $5.50 after beating on earnings and revenue. The swipes, though, I'll give you two scenarios. You tell me what's more likely to happen. Number one, a slowing economy, a recession hurts Visa, just like it hurts MasterCard, just like it hurts the overall economy. But here's the thing. Visa gets paid off percentage of sales. So inflation actually is a tailwind for Visa, isn't it? Because if the overall ticket price is big, they do better with higher ticket prices because of their percentage. So which is the stronger effect on Visa right now? The potential of a slowing economy, which looks like it's hitting MasterCard, or inflation raising that ticket price?
Well, I think both will be impactful, but the thing, the unknown of the two is how much consumers are going to be able to continue to swipe. What is known is the inflation rate, and you can kind of bake that into the numbers. You can kind of put that through. I think you're right. They get a percentage of every transaction. So when prices go up, that's great. But we kind of already know how much prices have gone up. What we don't know is how much elasticity of demand is causing consumers to pull back on their total spend. There's only so much in the pocketbooks of a vast majority of consumers to spend each month to swipe that credit card. And when they start getting to those max levels where their credit card is maxed out, there's really nothing that the banks can do other than extend more credit to someone that's falling behind, which generally isn't a good idea, or take the fact that they're going to spend less. And so I think spending less is probably the answer for now. And I do think we're in the early stages of this. I don't think it's like red flags everywhere, but there are some yellow flags that people are getting a little tight here, and it's getting a little tough, especially in that middle part of the curve where most of these credit card balance holders live and work every day.
And Andy, when you guys, I know you guys cover happiness quite a bit on a lot of these companies that you cover. I mean, when you look at Visa and MasterCard, they seem to be in one pod, and then you've got maybe Discover and American Express in another because they do some lending on that side of it. What are your happiness levels look like for these credit card companies, and do you have an earnings score for Visa going into the report?
Yeah, it's pretty stable for something like Visa or American Express. I think American Express is slightly insulated from a lot of this because they tend to attract a little bit higher level from a financial perspective than Visa. So, going into this, we think Visa, the risk is just a little bit more to the downside. If I was going to bet one way or the other, I would probably lean bearish, but nothing out of control, nothing that tells us there's any dire situation here. It's just a little bit more negative, and the stock moving up recently gives us a little more confidence that a pullback is probably likely after earnings.
Yeah, definitely. The stock is up, 11% over the last year, so outperforming the overall market. Yep. And maybe, conducive. Because the bigger ticket price, as you mentioned, Kevin, people are still paying more, right? So they get paid a percentage. But at some point, that demand in Andy's data, as far as people's savings getting depleted, where they're just going to have to pull back on everything.
I think that's what you're seeing in MasterCard today.
Yeah, definitely. All right. Thanks, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder of LikeFolio, giving us the data here on Visa. So we got